Welcome back. Declining commodity prices, possibility of a gradual monetary tightening in the U.S., and the weak growth global outlook for the Chinese economy are the major risks to the global outlook. Now, this is according to FSDH Merchants Bank Limited. Now, in its recent report on the economic and financial market outlook, the bank expects modest growth in advanced economies, while emerging and developing economies may witness slower growth. It also expects more currency adjustment in some emerging and developing markets, particularly in commodity-dominated export economies. According to the reports, the current low oil price provides a rare opportunity to lay a solid foundation to grow the non-oil sector of the Nigerian economy. It maintains that with appropriate policy stimulation, manufacturing, agriculture, construction, electricity and power sectors will witness considerable growth. And for them, one of the short-term painful measures that the central bank needs to make to boost investors' confidence is to devalue the naira in the region of 230 to 240 naira to the greenback. Okay, let's bring in the head of research at FSDH Merchants Bank, Mr. Ayo Akiomi, to tell us more about this outlook. Good afternoon, Mr. Akiomi.
Thank you very much. Good afternoon.
Welcome to the program. Now, concerns over slowing global economic growth is still high, as stated in your report. Now, the low commodities prices is still a major factor for slowing growth globally. Now, you stated that there may be modest growth in advanced economies, while emerging and developing markets may witness slower growth. How did you arrive at this projection?
Okay, thank you very much. If you look at the World Economic Outlook update by the International Monetary Fund released in January, that's the view that they have about the growth in the economy. And that view was also supported by the view of the World Bank about the slowdown in the Chinese economy, which is the second largest economy in the world, and also the impact of that one will have on global economy. The monetary tightening in the United States, the FOMC, that Federal Open Market Committee, may likely raise rates again this year. We are looking at in the region of 1.5 from 0.25 that year, and that will have a lot of impact on the flow of funds to the United States from the developing and emerging market. Again, is the fact that declining commodity prices, which is eating Nigeria at the moment, these are the major risks that will likely impact on the global outlook in 2016.
Okay, according to a report, capital inflow for Nigeria in 2015 dropped by over 53%. When we look at the possibility of a continuous U.S. rate hike, like you mentioned, now there are fears that that figure may actually drop further in 2016. How can we reduce the impacts of the rate hike by the U.S. Fed on Nigeria?
I think one of the issues that we raised is the fact that, which of course is in line with IMF's view also, is currency adjustment. Now, when you have interest rates rising in the United States, which of course considers, if you like it, a safer economy than all of these market economies, and the fact that we do not have so much of currency this year, then you have low interest rate regime here, high inflation. In fact, the number of federal government bonds and treasury bills are currently trading at negative yield, meaning that the inflation rates are actually higher than we have now. The latest one by National Bureau of Statistics is actually higher than some of the yield that we are getting, which serves as disincentive for investment. And you also, in addition to that, you also have the potential foreign exchange risks. So these are risks that are available in Nigeria here, which to a larger sense are muted. So funds will, and that will not allow funds actually to flow into Nigeria. Not only the portfolio investments, foreign portfolio investment, even to the real sector of the economy. We've got a lot of companies who from abroad who want to actually invest in sector of the Nigerian economy, but they are waiting, they are delaying to get more clarity about the direction of the central bank on the exchange rate. Okay, so those are the things that will not allow foreign funds to into Nigeria.
All right, thank you so much, Mr. Ayoakumi. That will be all. Mr. Ayoakumi is the head of research at FSTH Research Merchant Bank. When we come back from the break, we will be talking to you about how a local organization in Kaduna has introduced an eco-friendly house. Stay with us.